Hello again. Today I want to talk about the trade sale. Ultimately, a trade sale is all about getting the value that you built up over these days, weeks, months, years with your project, and now you want to be able to cash out. If you don't get a payday, really all you've got is a job, and you've got to be very careful that you don't end up with just swapping your job working for someone for a job where you carry all the risk. So in a case like that, it's best to build it up, sell it, and then you've got the process from end to end that you can use on any other idea that you have or anyone else has, and help them get your become a mentor of their IP nurturing process and take them all through the 6 steps right through to trade sale. Okay, so what's the hardest part of a trade sale? For me, it's not finding the buyer. It's selling, pitching the value, building, identifying, articulating, and then pitching the value to the prospective acquisition party. Now, most critical thing is your preparation for this, and it takes a lot of preparation. We've gone through a little bit about how you prepare for trade sales and also for licenses, and a lot of that is the same because you're trying to find an identical type party from the industry or the market. So there's a lot of similarity there. The first place I start looking is your partner in licensing or trade sale, because they are most likely to buy the project out to protect themselves. So what I normally do in a license or a distribution agreement is look for a first right of refusal for a purchase. So when you get a price, somebody can say, well, yeah, I'll match that, or I want first dibs, I'll take it. So either way, you've got your preparation done, because you've got to understand you're not flipping an idea. A lot of people think, I'll get an idea and now I'll find a buyer for it. It doesn't work like that. You have to sell a future cash flow for that particular buyer. So they're not buying your project, they're not buying anything, they're buying a future cash flow. And it happens to need your product or your process or your commercial model in order to make that happen. So, and not only do they have to, you have to pitch this to the board to get a decision, or the CEO, you have to go a lot higher, because with a publicly listed company, and we're going to give you reasons why you should be looking at publicly listed companies, you have to justify it to the accountants, to the auditors, also the legal team. Everyone's going to want to get a piece of this to make sure that it's going to fit the audit process and it's going to comply with their vision, mission, and values that they've set to the stock exchange, whichever exchange it is. So, and in order to do that, they are going to need a method of calculating value to them. And you need to be able to make sure that what you come up with is congruent with that. Now, you need to also understand these external parties. The response no is always their safest advice. And so you have to make sure that they don't choose a no. So that's not always the easiest thing to do. So you need to understand before you start that no company out there has a spare stash of cash for unforeseen circumstances for the current financial year. Let's say for this exercise, let's say you're wanting $5 million for this. Well, it's going to be almost impossible for you to get $5 million for this just by asking cash, because nobody will have it, and they have to put it off to the next financial year and build it into their P&L, or they have to take it out of their dividend money, the balance sheet at the end of the financial year, in which case their shareholders are going to get a little bit less in terms of dividend if they take $5 million out and acquire your company. It doesn't matter how good the asset is, they're going to get some kickback on that. So the best way to do it, the traditional ways, by the way, just take too long. They're usually about 2 years to make it happen, because they have to go through at least one financial cycle. So let me show you the way we do it, which is called the cashless transaction. So we don't have to find a spare $5 million in their balance sheet, and they don't have to squeeze $5 million more out of their profit and loss for next year. We're just going straight in and saying, we want you to do a circular resolution to shareholders and issue stock to this company in exchange. We'd say it's $5 million worth of stock in exchange for their $5 million worth of stock in their company, and we're just acquiring the company. So you become part of their team, which is a far better part of their shareholders, but also you're standing behind your product by moving into their team. So they're going to like the idea of you're still on the hook a little bit, even though you could ring your broker the next day and dispose of all the shares if they're not escrowed. And that can happen, but that would be pretty much a failure for them. So let's go back and say that you want $5 million and they want to give you $2 million. Our win-win can give you $6 million. And the way we do that is we set 3 to 4 intervals of stock issue. So it's not just here's a $5 million worth of equity on a sheet. We're going to give you 3 lots of $2 million, starting one now and then one in 12 months time when you help us meet the KPIs for the 12 months that we've agreed to. And then at 24 months, we're going to get another lot. So now they don't mind doing it because you've accepted the risk from them. So they're quite okay with it, and you've got an extra 20% on your deal. So you've reduced their risk. They can afford to pay you more as a result of that. So you need to know how this works so you can make it happen for your project when the time comes. You need the confidence in what you're selling and the cash flow. If you don't have the confidence in this being able to meet the KPIs that you've agreed to, it's going to crash, it's going to take you down with it, and you won't get paid any more than what you've already received, which is usually less than what you've asked for. If you can't have the confidence, why ask for that much in the first place? So I'm assuming that you do have the confidence to do it and you want to do it. So if that were the case, then we do a script for script rollover. You need to talk to your accountants because it will differ across every jurisdiction, but essentially we're going to swap your 10 issued shares for $5 million worth of the issued shares in the company, and then that transaction happens, the title goes to them, and then there's KPIs which will top you up as you go. Now, there can be escrow associated with this. Escrow is where they don't allow you to sell your shares until you've been with it for 2 years or 18 months or something like that, to make sure that you're not just going to dump something and run, which a lot of people think that they want to do. And it's not the way to do it with a trade sale, that's for sure. So if your company's traded 3, 4, 5 years already and it's profitable, then your script for script rollover is very easy. You can argue that there should be no escrow period, and the auditors will accept that. But it'll take an argument. You've got to pitch your reasons, and the auditors will ultimately need to sign off on it before the company can do the deal. So we show you how to do that. We negotiate all of those sort of things. But more importantly, in this level 1 program, we'll actually teach you how to do it so then you can do this. And then at the end of that, you've gone the full 6 steps right through to trade sale. And at the end of your or exit, because trade sale is just one exit. But at the end of this, you can then opt in and become an IP mentor. And that means we can engage with you for other projects where people have come in at level 1 and decided, I haven't got the time for this. I don't want to become I want to go back to engineering or design. I don't particularly want to go into all of this new area. So who can I do it? They can pay me for it, but I only have so many arms and legs. So what we do is we find our IP mentors, and we've got a list of them. They have graduated in 6 months, met their objectives, made money, trade sale their project, and they're now looking for a new project. In a case like that, they can invest in that project, which is quite smart because obviously you've got everything it takes to get it from where it is now to where it needs to be. And being involved in that means you're taking a slice of the pie. But you can also just take a block of 10 hours, prepaid 10 hours from the company, and do the work for them. And then every 10 hours, it may need topping up if you haven't completed the work. And it's their choice of whether they keep you going or switch to someone else. So it's up to you to keep on your toes. And most important, at that point there, they can control their costs, and you can actually do the work and give them a report after 10 hours. Okay, thank you very much. If you want any more information on the program, please click the link below, make a booking with me, come online, and I'll talk to you about your project and your intentions, and then we can see whether or not we can fit you into the program, which gets underway at the end of January. Okay, thank you very much. We'll see you on the call.